For the last 20 years, Elon Musk's SpaceX has been the ultimate white whale of the investing world. It dominates over 80% of all global space launches. It holds a complete monopoly on high-speed satellite internet with Starlink, and it is currently sitting on a staggering valuation of $1.75 trillion. It is a company so powerful that regular investors like you and me have been banging on the doors for a generation, begging for a way to get a piece of it. Well, according to reports leaking from Wall Street this week, the doors are finally unlocking. SpaceX has reportedly filed confidentially with the SEC for an IPO. But before you rush out to transfer your life savings into a brokerage account, we need to dismantle a massive, dangerous myth. There is a deeply ingrained belief in the retail investing world that getting your hands on a massive, hyped-up initial public offering is an automatic ticket to the millionaires club. People assume that because a company is revolutionary, the stock is guaranteed to skyrocket on day one. But today, we are exposing the dark machinery of the IPO market. I'm going to show you exactly why Wall Street loves to use massive hype to trap everyday investors, and how you can actually position yourself to profit without walking blindly into a slaughterhouse. Now, I need to make sure you actually get across the finish line with this information. At the absolute end of this video, I am going to reveal a highly contrarian psychological perspective. It is a specific, single-word mental trigger that the smartest institutional investors use to know the exact minute a hyped-up stock is about to crash. It flies completely in the face of what the media tells you to do, and applying it will save you from losing thousands of dollars during the SpaceX mania. To understand why a company like SpaceX commands a valuation that makes it more valuable than Meta, Tesla, or the entire market cap of Bitcoin, you have to look at what Musk is actually building. This is no longer just a rocket company. First, you have Starlink, which is crossing 10 million global subscribers and is on pace to generate over $20 billion in revenue this year alone. It is the only high-speed internet provider that works literally anywhere on planet Earth. Then you have the sudden integration with Musk's artificial intelligence venture, xAI. They are actively working to build orbital data centers, massive supercomputers in space powered by constant 24/7 solar energy. By moving AI processing off the planet, SpaceX is actively trying to solve the massive power and cooling crisis that is currently crippling data centers on the ground. When you look at the company through that lens, you aren't just buying a rocket company, you are buying the future of the internet, the future of artificial intelligence, and the future of deep space infrastructure. But here is where the myth starts to unravel. Wall Street knows exactly how badly you want a piece of that future. They know that when the public hears the name Elon Musk and sees a number like $1.75 trillion, their logical brains shut down and pure, unadulterated fear of missing out takes over. In a typical IPO, the big investment banks keep 90% of the shares for their billionaire clients and institutional funds. They let those big players buy in at the set floor price before the stock ever hits the public market. Then, once the opening bell rings and the public rushes in to buy the stock at a massive premium, those big players quietly sell their shares to the enthusiastic crowd and walk away with billions of dollars in pure profit. It is a transfer of wealth disguised as a public celebration. If this highly skeptical, direct breakdown of market mechanics is giving you a perspective you don't normally see on your feed, consider subscribing to the channel. We don't do blind hype or worship billionaire founders here. We look at the actual plumbing of the financial system to make sure you are the one collecting the toll, not the one paying it. Tap that button if you are ready to stop being exit liquidity for the ultra-wealthy. Now let's get back to the SpaceX strategy. Reports are indicating that for Project Apex, which is the internal code name for this SpaceX IPO, Musk is planning to break the traditional Wall Street playbook. He is reportedly pushing to allocate a massive 30% of the total shares, specifically for individual retail investors. Morgan Stanley is reportedly leading the charge, and they will likely be using the E-Trade platform to distribute those shares to everyday people who indicate an interest. On the surface, it looks like a beautiful act of democratization. It looks like the little guy is finally getting invited to sit at the adult table, but do not let the flattery blind you to the math. A $1.75 trillion valuation means that SpaceX is being priced for absolute flawless perfection. To justify that price tag on day one, every single Starlink satellite has to launch perfectly. The massive Starship program cannot experience a single delay or regulatory hurdle, and the experimental space-based AI data centers have to become wildly profitable immediately. If you buy at that peak valuation on day one just because you are excited about the brand, you are leaving yourself zero margin for error. If a single test flight fails or a government agency places new restrictions on satellite orbits, that stock could easily plunge 20 or 30% in a single afternoon. Wall Street will have already cashed out on the hype, and you will be left holding a very expensive, heavy bag while you wait years for the company's actual revenue to catch up to the stock price. If you genuinely want exposure to SpaceX's growth without walking directly into the meat grinder of the day one public listing, you have to look for the cracks in the fence. One method that smart investors are using right now involves looking at publicly traded, exchange-traded funds that already hold private SpaceX shares. For example, the Destiny Tech 100 fund, which trades under the ticker DXYZ, has SpaceX as its absolute largest holding, making up over a third of its total portfolio. Buying into a vehicle like that allows you to get indirect exposure to the asset today, while private market valuations are still operating under some semblance of reality, rather than fighting the screaming masses on the New York Stock Exchange in June. Another strategy requires simply practicing the most difficult art in all of finance: extreme, boring patience. History shows us that almost every massive, hyper-hyped tech IPO follows a very predictable pattern. There is a massive spike on day one as the public rushes in, followed by a slow, agonizing bleed over the next 6 to 12 months as the hype dies down and reality sets in. That is the moment the smart money actually steps in. They wait for the crowd to get bored and frustrated, and they buy the asset when it is sitting at a realistic discount, not when it is on the front cover of every magazine on Earth. To survive this impending media storm and actually turn it into a wealth-building event, you have to actively build your defenses right now while your head is clear. You cannot make rational decisions when the countdown clock is ticking and your phone is blowing up with notifications. The first shift you need to make is to separate your love for a visionary product from your assessment of a stock. Elon Musk is arguably the greatest engineering mind of our generation, and what he has achieved with SpaceX is nothing short of miraculous. But a fantastic company can still be a terrible stock if you pay a ridiculously high price for it. Train yourself to ignore the cool factor. Look at the hard revenue numbers, the overhead costs, and the burn rate that will be revealed when the official S1 prospectus is unsealed. If the math doesn't make sense, do not let your emotions override your calculator. Secondly, if you do decide that you want to participate in that 30% retail allocation, do not treat it like a lottery ticket. Prepare yourself mentally for massive, violent volatility. Fund a small amount that you are perfectly comfortable watching. Drop by a massive percentage without losing your sleep over it. Set up your accounts on the platforms handling the distribution well in advance and understand exactly how to navigate their indication of interest tabs. Do the boring administrative work today so that you aren't rushing and making emotional click decisions on the morning of the listing. Now, as I promised you at the very beginning of this video, here is that contrary psychological trigger that institutional players use to know when a hyped stock is about to fall off a cliff. That single word is certainty. When you start reading message boards and hearing casual investors talk about a stock as if success is an absolute certainty, that is your cue to back away slowly. In the real world, the future is incredibly messy and unpredictable. True investing is the management of risk and probability.
When the public starts believing that a stock is a sure thing or a can't-lose guaranteed winner, it means all the risk has been completely ignored and the stock has reached its absolute peak of danger. When certainty is in the air, the smart money is already headed for the exit. Take a hard look at your own mindset as this massive SpaceX listing approaches. Are you looking at this as a calculated, long-term asset to add to your portfolio, or are you looking at it as a quick ticket to easy gains? Be honest with yourself. It is far better to miss a flashy party than to be left holding the bill when the lights come on. If you appreciate this direct, no-hype approach to analyzing the biggest events in financial history, show some support by hitting that like button. It tells the platform to keep delivering grounded perspectives to your feed. Write the word certainty in the comments if you are committed to keeping a cool head during the upcoming mania, and I will see you in the next breakdown.